what's up, traders? It's Ronnie G from YMC, or Young Money Community, and I'm going to be talking about the S&P, the SPX, whatever ticker symbol that you use to look at the S&P index. So I'm making a wild and maybe too brash prediction, okay? And I'm going to go into why I think that the stock market, as you guys know, in the beginning of 2022, we had a major you've just been hearing bad things. You've been hearing the worst, right? I think that, before the end of the year, we're going to recover and we're going to be back in a bull market. Here's why I say that. Because we've been here before with a more steep drop, and that was 2020. Pandemic, everybody going pretty much crazy, right? Everybody's saying like this is the end, But what happened after 2020? What happened in mid-year of 2020? In the beginning of the year, you see on the chart here that this was in February where, we reached the peak of that year and we dropped hard. We're talking 32%. Recession, all that jazz, right? And then later that year, we had a steep rally and the market ended higher, like crazy. It ended higher. And then 2021, the market was amazing. No really big drops. There was a little scare of 2021 back in February again. But, the market, it just increased. It went up and it did some great numbers. Here's why I say that we're seeing the same thing happen right now. For the past month and maybe even 2 months, and you can fact check it on my Twitter, in my Discord, I'm telling everybody, I'm like, hey, if we get back in the good, if the S&P crosses the 9 EMA or exponential moving average, I think that we have an opportunity to see one of the greatest comebacks in the market. One of the greatest. As you can see here, it did the same thing, right? Dropped. This year it dropped right in January. Like it just tanked all the way down. Now we can go into the discussion of manipulation, but that's not, that's a whole different video. What we see here is I created what I call a demand zone, where I see a lot of activity and then I see some rallies. And I seen this in 2021, where we reached this zone right here where I haven't marked off, support, resistance. I haven't marked off for you so you can see it. Right here, you can see where there was some struggles, but then it continued to rally and push past it. Right here, a lot of analysts, and if you look back on Market Watch, Jim Cramer, they was like, hey, nice rally, but it's time to go back down. No, that thing pushed past resistance of this demand zone that I've now created for the current day or current year, and it rallied up. It had another drop, and then it created a support right here. And then we finished off the year very strong in the 4,800s. And then in the 2022 year, the year that we're at today, we had this big drop. Now, this big drop happened, and then it started to consolidate around the same zone in what I call a demand zone, where there's a lot of buying power. There's a lot of new money flushing in the market. And we see here that when it did hit that support, it hit this demand zone, it rallied, and that's why I look at demand zones where there's a lot of friction between buyers and sellers. It starts to even out. And if you know how to analyze charts, these candlesticks and these green and red candlesticks, they start to go up and down. And there's not really a clear direction of up and down. It just kind of gets it gets very tight, right? Now, it rallied, right? And we're like, okay, it's probably going to return. But so many things started happening. We started to see, inflation and all the news and a political decisions that affect our everyday life. And then this thing tanked. All right. It tanked hard. And now, in current days, everybody's been looking at the current inflation rates and trying to understand, what's going to happen. For me as a trader, I don't really give a damn about the long term. All right. That's just me. What I care about is momentum, right? Because you can make money in any market as a trader. Now, if you're a long-term investor, this video is not for you. Okay. You can probably still learn something, but I'm speaking to the momentum traders out there, the day traders, the swing traders specifically, because we make money on momentum. All right. We do not make money in the long term. That is not our play. That is not our game. We're looking for those momentum swings. So right here in middle of the summer, we see this friction start to happen again. Okay. Now, if you look in the past here, if you know how to do technical analysis, we see that, in the past, 2021 last year, it started to do the same thing right in this area, right? You see some consolidation right here, consolidation right there. It doesn't want to go past that. So, we started to see, okay, this may be a support. We see up and down movement, but there's no clear direction on up and down. So we have consolidation. Then we have a big rally, and not only does it rally, but it gets right past this EMA. Now, I use the exponential moving average to help me measure momentum on a chart. I don't have to do the calculations. It's just on my chart. I use that as support and resistance. It's just an indication of momentum and where I see the momentum happening. Now, momentum happens when I see that it passed above or below. If it passes above this blue line, I'm like, hey, there's a momentum swing that is going to rally. There's more demand, right? And if it passes below, I'm like, okay, it has momentum of a lot of bears, a lot of short sellers. And I'm like, okay, maybe, we're bullish and bearish there, but we see a rally. All right. There is a demand for the market in total. Now, remember, the index is just measuring the top 500 corporations in America, which keeps our economy alive. This is why it's an index. We look at this and measure the success of our market in this economy in the United States of America. Now, let's go back to this demand zone. This demand zone is basically giving me a point of review or reference of what happened before. And you can still go back in history and look at the charts and see that there's more references that you can use to kind of give you some predictability, or it helps you measure what you can bet on in the future. For me, we're in this demand zone, and I've been talking about it for 2 months, that I don't believe that, if this cannot maintain the demand zone for at least a month or two, then yeah, it's going to tank again, and then we're going to have scares. But I believe that if this area of demand right here, and we're going to zoom in here, if we can maintain, and see, you can see where I first created the demand zone, and this was the beginning of June. If this can maintain, right, and this, the S&P surpasses the 4,300s, and we can maintain it, not saying that it's going to continue to rally, but it can, start to consolidate like it did right here, and then, maybe we can maintain. I think it can push past this resistance right here and get past the 4,300s, and really surpass it, and maybe even end off the year in a positive note. So what does that mean? What does it mean? It means that, the talks of the job market, you talk about inflation, you talk about all the scares of, hey, can I, survive? Are grocery prices going to continue to go up? I think we're entering a new era of the stock market. All right. I've been around 7 years, and I try to keep it very simple as possible when I look at the market. I don't try to complicate it with too many numbers, too many analytical points, because it can get confusing. So I'm saying that if the S&P, in the S&P 500, it can get surpassed 4,300, it can maintain it, I think we'll be in good shape where we will end off positive or even break even on the year. What does that mean for traders? This is the greatest comeback, one of the greatest comebacks in history of the market, and the market's going to continue to have more highs and create more economy growth for the U.S., and I think it creates more money within our economy. So I think you can take advantage of this as a trader. Looking at the index is something that I do every day, but it's also how you can get ahead of the game. All right, you can get in, make some plays happen. Our community, the Young Money community, we've been making plays. We've been making money during this supposedly bear market because we're all about momentum. So if this stays and it consolidates, I don't expect it to keep, rallying. I expect it to, drop down a little bit more. But if it gets past this again, we're talking a big, big rally. Now, why do I say that? Let's go back to 2020. The doom year, when everybody was panicking. I mean, people taking toiletries and hoarding toiletries and, disinfectant spray. You guys remember that. I don't have to go too deep into 2020. Wild year, right? But this thing rallied and it surpassed where it started that year. That year, it started around 3,200. And it ended off, it ended off around 3,700, close to 3,800. I think we'll be in a good place if this can consolidate and maintain the demand zone, and we get new flush of investors, new money coming in, and retail investors jumping in. Right now, a lot of retail investors are jumping out, but they're missing it. You guys that are new to this, you guys are missing the money that you can be making on these plays. You have to pay attention to the index. You have to analyze and see what's really going on, and stop listening to the news. You guys listen to the news. You wake up listening to the news, and they're not in your favor. Okay, they're paid by the big firms to push out any type of news. We all know manipulation happens. You talk about Melvin Capital, Citadel. Like you talk about these big firms. They're under investigation now because of the AMC and the GameStop situation. Keeping retail investors from buying up because they wanted to push down so they can get cheaper prices. When do you want to go to the store for all my older millennials and buy a couch for $200 rather than buying it for $1,500 or $2,000? Absolutely. Same thing as the rich does is they're going to drive price down. They're going to use media. So stop listening to the news. Get on one of these platforms. Analyze the charts. You can use TradingView for all I care. Get on these charts. Look at what's really going on with the price and make your decisions based on these momentums. Like I said, if you're a trader, not a long-term investor, you can still make money in this bear market. I wanted to point this out to you guys because I'm making a rash bet that we're going to end off this year in the market back almost square even, above 4,700 or surpassing 4,800. All right. Now, if you're a new trader out there, you don't have anybody that's showing you this, you're just now getting started, join YMC, join the Young Money community. It's a group full of trading experts. We've been around for years. I've been around for 7 years. My story, living on my car, turned $5,000 into $103,000 in 8 months. From then on, I've surpassed $500,000 in profits, along with many other traders and friends of mine that we've been around for years. So we see these things and we notice these patterns that are recognizable, and you can use it to your advantage. All this information is free. It's free. You just have to be willing to look at it and analyze it and make your decisions, make your bets. But if you're a new trader, jump in the game. You can join us. We're free. Join our Discord. The link is going to be in the bio. Like, share, subscribe if this really helped you out. Like I said, we just want to empower retail investors. I think that the market's going to be back good by the end of the year. But I want to sign off on that note. This is Ronnie G from the YMC community. Peace.